First video of 2023. Happy New Year's everyone, and I'm excited to bring y'all this new video. It is packed with detail, so let's keep the intro short and get right into it. Alright, if you watch any of my previous videos, you're familiar with my top-down trading approach. So first stop, the 15-minute chart. Now before we begin with the analysis, I'd like to clarify two things. One, each of these bars, red or green, represents 15 minutes of price data. Two, the three lines you see before you here are simple period moving averages. The top red is the 200 simple period moving average, the blue is the 20, and the gray is the 8 simple period moving average. With that clarified, let's move on to our analysis. And looking at this chart, I can see XOM has been on a downtrend for the past 3 days. And around 11, we get this big red bar. Now, at the correct location, in the start of a trend, a solid red bar like this statistically has a high follow-through rate. However, in this case, after a multi-day run, this could indicate exhaustion, a potential bottom, at least temporarily. How can I tell? There are three reasons. One, it's XOM third consecutive day down. Two, this big red solid bar produced little to no follow through. And three, about 90 to 95% of big red was completely erased. So not only did it not produce follow through, but big red was completely undone, indicating to me buyers stepped in a big way. With that, ladies and gentlemen, we conclude our 15-minute time frame analysis. Next, let's move on to my preferred trading time frame, the 5-minute chart. And on a 5-minute chart, here is how that big red bar was produced on a 15. And as I pointed out earlier, buyers stepped in and held the price. Sellers attempted to take charge again, but failed. A second time, and buyers held the price again. The third time, not only did the sellers fail to take charge, but in one 5-minute bar, the buyers cleared almost 45 minutes of price action. Now, I know it seems like I'm building a case for a long play, but that is not the case. So let's move on to my trade and the reasons behind all this analysis. For that, let's zoom in a little closer so we can really drill down on pattern recognition, since you already built the foundation, the context for the trade. If you recall, on the 15-minute chart, XOM has been on a downtrend, and here on the 5, we continue that trend as XOM holds the trend line. 2, after that pop, we've pulled back under the MAs, and price holds below the 50% of that drop. All we need now is the pattern, and this will serve as a perfect example of what I like to call the risk pause play. Again, I'm not the original creator of this particular pattern. Its original name is GBI, which stands for green bar ignored. I simply just tweaked the name to emphasize what's important to me, and in hopes by the end of my description you'll understand why. So first, we need a significant bar, which we have. This bar here has cleared the past 8 bars to the left. Now the following thing we need to see is a narrow range bar. Could be green, could be red, but it needs to be on the lower 1/3% of our clearing bar. This little bar represents our risk, but for us to get triggered into the trade, we need the following bar to take out the low of our pause, indicating our entry and placing our stop above our risk pause bar, hence the name risk pause play. Now why the heck would I be taking a trade knowing there's significant support down under? Well, that's the beauty of this particular pattern. My risk is so small, by the time the stock hits support, my 2-to-1 profit take rule will be met, and if XOM wants to break down and give me more, I'll leave some shares for the trail. Now I understand this can seem like a lot of information, especially for new traders. Hopefully I was thorough enough to cover every aspect of this lesson. Yet, if you have any questions, you can drop it in the comment or reach out to any of my socials. Links are in the description below. And finally, let's see how this play turned out. For a better visual, I'm going to bring back our trend and our trigger entry line. And all we simply have to do now is wait to see if price gets below our trigger entry line. And if it does, we jump into the trade here, and now that we're intra trade, we protect ourselves and place our stop right above. And here, 1 to 1 to 1 is established, break even is in. If you're not familiar with 1 to 1, it simply means, for example, if your risk was 20 cents, once the stock has moved in your direction 20 cents, you eliminate risk. And now here we're getting close to my 2 to 1 target. I'm gonna throw some orders there. There you go. I get filled. Let's see if this thing continues to go. And if it does, I'm looking to take profits near support one more time. And the remaining shares, I'm gonna trail at break even until this gray line catches up to the price, so I can start trailing with the 8 simple period moving average. From here, there's only 2 options. The stock can continue to go in my direction, in which I plan to take more profits near support, or it can pull back, hit my break even, and I'm out of the trade. My hopes is that the stock continues to go, in which I can take my second profit near support. And there you have it. And now my third wish, my third and final wish, and this is the only place you should be hoping and wishing, is in profitable territory. You should never hope and wish in a negative position, which could end very badly. So what I'm hoping for is that the AMA checks the price and keeps it below, so I can ride until close. But if it doesn't, I still have my plan to get out if the stock comes back and hits my break-even point. Either way, I'm in the money. And if the A doesn't hold, I will honor my stop and move on. And there you have it. My break-even was hit. This makes the end of our video. Hope you enjoyed it. Hope you found some value. And I'll see you on the next one, my friends. Peace out.